My name is Debbie Edmond, and I am a licensed real estate agent for the state of Florida. And I'm also a licensed loan originator for the state of Florida, Georgia, Texas, California, and New Jersey. For real estate, license-wise, I've been licensed since 2021, but in the real estate market per se, because I've been a loan originator longer than that, so I would say since 2015. I mainly focus from Palm Beach County, St. Lucie County, going down south as far as Miami. Neighborhood-wise, there's not a specific neighborhood that I specialize in, but I do service in different counties, as I mentioned before, from St. Lucie County going south down to Miami. As of right now, we would say it is a buyer's market. And the reason why I say that is because properties are sitting on the market a little bit longer than they would normally. So there's a lot of more inventory. So it gives options to buyers. So it makes it a buyer's market where there's more inventory than buyers. Currently, right now, I am working with a couple real estate clients who are actually, I'm helping them on the buying side. And on the listing side, where I'm also a listing agent as well, not only a buyer's agent, I have a couple listings down south in the Broward County. So as many clients I can help, because it's not just me, we have a team of individuals as well as part of my team that will be assist. So we are taking new clients. How do I help buyers stay competitive in this market? Well, I would say the prize is that being a loan originator as well, I know, and also as a licensed real estate agent, I know what a realtor is looking for, as in the client who are using financing. If you're using financing, because obviously you can buy cash, but if you're getting financing, having an understanding of both sides of what is needed, it gives my clients a competitive edge, because not only are they actually qualified buyers, because any client that I work with, I make sure they're qualified. That means that all their documentation has been collected and verified before they are issued a approval of purchase price. So when they go out in the market, you know that they're a solid client. And then when I get calls from listing agents that's verifying this client that's putting this offer in, I let them know, hey, I'm a real estate agent as well. So they know that I'm not going to give an approval to a client who does not qualify. So how is it competitive? If the client is working with me as a real estate agent and also as their lender as well, it gives them a competitive edge, because they know that they're actually qualified and there's not time being wasted. And let's say they're just working with me on the lender side, the fact that I also let the other real estate agent know, hey, I'm a realtor as well, so I know that you're not want to waste your client's time or your time, because I'm also an agent, so I understand what we as realtors go through. So that's how I feel like I'm competitive, because my clients get best of both worlds and the partners that I'm working with. Okay, so let's see how much time we have for this. So the home buying process, when I'm working with a client or working with my realtor partners that I help qualify them on the mortgage end, I always tell them, do not go out and show a client a property without knowing their financial situation. And the reason for that is because we can, on the real estate side, we can go out and show the client multitudes of properties, but we don't know what are the financial means for that client. So I always tell them, hey, let's get them pre-qualified, which is the beginning of the process. Let us find out what is the amount that the client can afford. And that process is multiple different steps, from verifying income, assets, debt, credit, and many more depending on what type of client you're working with, what type of income stream they're bringing in, because you can be working with a person who's a regular W-2 employee, or it could be self-employed, or maybe have a lot of assets that they can use to qualify. But we can go into details of that on an individual basis. But first thing is always get pre-qualified if you're financing. If you're buying cash, then all we need is to verify assets. From there, once you get pre-qualified, the next step is where you would go out with a real estate agent. First, you would sit down with your real estate agent, tell them what properties that you're looking for, what areas you want to buy, what you're looking for in a property. And then as a real estate agent, it's our job to find properties that fits your needs, but also fits your financial means. So we would look to see what properties that will be close or exactly what you're looking for in your financial situation. And then once we do that, you would go out, we'll show you a couple properties based on what you want to look for in the property. Once we identify the property and it's a go, we will write up an offer and hopefully that it get accepted. Once it get accepted, and then you'll get back with your lender, where they'll start the lending process from submitting your loan to underwriting to where they may have conditions. And then once the conditions are cleared and everything is satisfied for what the bank is looking for to see that you are qualified for the loan, then it's closing time. Well, my availability for showings are, my normal work day is Monday through Friday, okay? From 8 a.m. till about 6:30, 7 p.m. And then on weekends, it varies. I usually use that time to spend with my family, but I'm available. And regarding communication, I communicate through emails, phone number, text, video, because a lot of I have clients that are not locally here in Florida and have in other states. So I do a lot of Zoom, video calls. So you'll see my face, maybe not physically, but you'll see me. So that's my way of communication, because I think that communication is key. And if we don't have that, it's going to be very difficult for you and for me to get to your goals, of which is homeownership. How do I determine if a property is priced fairly? So there's a couple tools that I use. I would look at comps. I would look to see what properties that fits the property that you're looking at, what was sold in the last 6 months, or what's actually currently in the market. What's currently in the market doesn't mean that that's the price point, but just seeing how homes are priced and what was sold. And basically mainly comps. I use comps to determine if a home is priced fairly or overpriced or even underpriced. And also the condition of the property, because there could be a property that, it's an older home, but a lot of new upgrades that adds value to the home. And there are also some upgrades that actually doesn't add value to your home, but that's another discussion. So my strategy on making offers, the fact that I understand both sides. So let's say that I am helping a client and I am the realtor and also the lender on this transaction. When I put an offer to another agent listing, I'll let them know that, hey, I am the loan officer as well, and my client is qualified. And the reason why I say this, and my client don't have time to waste, and so do I. I don't have time to waste. So if I say my client's qualified, I mean, I took them through the process to make sure, hey, I'm working with a very qualified client to actually be the one to actually go out, drive around to show them different properties, because I wouldn't want to be driving around just to drive around. We're going to drive around because I want to help my client reach the goal of home ownership. So I want to make sure they're a qualified client. So it's like a plus when I let the agents know, hey, I'm also the lender and I know my client's qualified on this property. But let's say I'm not the lender and I'm also the real estate agent, but understanding the lending side and working with another colleague who's also a lender, knowing that, hey, this client is really qualified because they went through the same process that I would have taken them as a lender. So letting the listing agent know that, and I understand what they're looking for, and as an agent, I want to make sure that no one's time is wasted, not for them, their client, or my time or my client's time as well. So that's how I would say I'm competitive in a sense when putting in offers. But again, it's really based on if we come to a means with the owner and what my client is willing to offer. Yes, we can recommend different individuals that is needed within the buying process. Like you said, a contractor, maybe something needs to be fixed, or an inspector, definitely that's part of the process to make sure that there are not some major issues with the home that you're buying, because we'll see a home and we're like, oh my gosh, we love the house, but then you only see like the beauty, but then there's some things that a licensed professional like an inspector will look for that you as a normal person would not be able to know. And that's why you definitely want to get an inspector, insurance agents, and so forth. So yes, we can definitely recommend different individuals that is within the buying process to help you get to your end goal. If the home inspection reveals some major issues, it's not the end of it and all. There are things that can be done, such as we can ask the seller to either fix those issues, or we can ask the seller to give credit towards those issues if it's something that can be definitely done after closing. But if the seller and the buyer does not come to an agreement on these concerns on the inspection, then we would just cancel offer and withdraw. What type of home loans do I offer? So many. We have diversity of different loan products, from the traditional conventional loans, FHA, USDA loans, VA loans. We have non-QM loans, meaning loans that doesn't fit the standards of the normal loans. We have asset utilization. We have rental type of loan investments. So whatever way that to purchase a property, we have very creative financing. So we can figure out and find a loan product that fits you. Obviously, there are credit score requirements. There's our debt to income requirements, and but we can go over all that into details on a one-on-one consultation. Down payment that is required, it depends on the loan program. Like for conventional, from a first-time home buyer, you can have as little as 3% down. And then for someone who is buying, like maybe their second, who is not a first-time home buyer, but using the conventional loan as a primary, need as little as 5% down. If you're doing an FHA loan, minimum requirement is 3.5% down. If we're using a VA loan, that means you are a veteran. It's 100% financing. We have USDA loans, that's homes for rural areas, 100% financing. And again, there's different credit scores that's needed for that and so forth. So we can definitely discuss that on a one-on-one free consultation. So yeah, there are different down payment assistance programs. There are state programs, there are county programs, there are even city programs that they give you money for assistance if you're buying in a specific city. With these down payment programs, there are income requirements. So if you make well over the requirement, even though you're a first-time home buyer, you would not be able to use it. There are some restrictions about how much you can qualify for if you use these programs. So let's say that you qualified for a $600,000 home, without the program and you're a first-time home buyer. But now, because you're using this as program, it decreases the amount you can qualify for based on your income and your debt. So now a person who would normally qualify for a $600,000 home may now only qualify for a $400,000 home because of using this down payment assistance. So yes, you're a first-time home buyer. Yes, there are programs that are available as they become available as well. But if it restricts you from what you really want to purchase, then maybe we should look at other alternatives of having you with your down payment outside of using these programs. But yes, these programs are available. The pre-approval process is, I would ask the client a 24 to 40 hours, as long as all the documentation that I've requested is made available to me. So within 24, 40 hours, it only takes longer if you take longer to provide me what I need. But within 24 to 40 hours is normally the time frame to get a qualified pre-approval. In regarding to locking rates with your mortgage loan application, it all depends on you. We can lock it from 30 to 45 days to 60 days. What I normally tell my client, because when you first start shopping for a home, you might find a home the first month, maybe the second month. It all depends on what you're looking for. So, and the market changes all the time. But the good thing is that we do have partnerships with companies that help us watch the market. So if anything is going to change or any indicators that shows that maybe market is getting worse, then we'll say, hey, we'll give you a call and say, hey, maybe we want to lock in your rate now. Or, if we think that market will change and get better, then we won't lock it, but you can lock it from the time we submit your initial application or when we get closer to closing, because rates can go up and go down. But if rates are going to go up, we're going to say, hey, let's lock in your rate. But if rates it's going to fluctuate, we'll say, hey, let's keep we call it floating, and hopefully to get a better lock-in than if you were to lock in today. How long does the loan process take from application to closing? Well, I normally tell my clients within 30 days, but the fact that we did all the work in the front end, collecting the documents that's needed, normally I have closings from as little as 7 days from the submission of contract to about 2 weeks. But I normally ask for a 30-day contract, because you never know if maybe once the appraisal is ordered, something comes up with the appraisal, or let's say within your inspection period, there's stuff that needs to be corrected to be able to close on the house. So I would say a good 30 days, but I've closed loans as fast as 7 days. What documents do you need to get started? Well, it all depends on what type of income that you are making. If you are a W-2 employee, you're gonna need your W-2 forms, your tax returns, you're gonna need bank statements, you're gonna need ID, identification. Let's say if you're self-employed or you are a 1099 employee, you're gonna need your 1099 forms, again, your tax returns. If we're doing a asset utilization type of loan, we're just gonna need your bank statements. Or even if a business, we have big business bank statement loans. So depending on what your situation is, we have a product that will fit that for you. If you would like to get more information, you can contact me at the link below, or we can do a free one-on-one consultation, either both on the real estate or lending, or both. And I am here to help, Debbie, with your real estate and loans.